Preparing for a finance manager at AB InBev interview? You've reached Candy Mentor and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a finance manager at AB InBev? I would describe myself as a finance partner who converts commercial data into decisions. At AB InBev, I would connect volume, mix, pricing, revenue management, and cost discipline to profitable growth. I would own a reliable forecast, explain variances clearly, challenge assumptions respectfully, and translate financial outcomes for sales and operations. My goal is not simply reporting results. I would help the business act earlier, strengthen accountability, and improve cash generation across a complex, fast-moving consumer environment. While answering, connect your motivation to AB InBev's global scale, consumer brands, performance culture, commercial complexity, and the finance manager's role in turning analysis into profitable growth and better decisions. Question 2. How would you apply zero-based budgeting in an AB InBev business unit? Zero-based budgeting means every cost must earn its place rather than automatically rolling forward last year's plan. I would begin with strategic priorities, then review spending by activity, owner, and expected outcome. For example, I would challenge duplicated reports or low-return travel while protecting consumer-facing investment that supports brand growth. I would quantify savings, assign accountability, and monitor delivery monthly. The approach should improve resource allocation, not create indiscriminate cuts that damage revenue or capability. Make sure to cover rebuilding spending from business needs, challenging historical baselines, separating value creating from discretionary costs, involving budget owners, and protecting brand investment while maintaining cost discipline. Question 3. How would you build a robust monthly forecast for AB InBev? I would build the forecast from operational drivers rather than applying a simple percentage to prior results. That means connecting volume by channel, price realization, product mix, promotional activity, input costs, currency, and working capital to the income statement and cash flow. I would involve sales, supply chain, and procurement early, document assumptions, and create upside and downside cases. After each close, I would measure forecast accuracy by driver, then improve the weakest assumptions. In your answer, talk about operational drivers, volume and price assumptions, seasonality, commercial inputs, scenario analysis, ownership, forecast accuracy tracking, and fast communication of risks and opportunities. Question 4. Tell me about a time you explained a significant budget variance. In one role, logistics expense was materially above budget. I decomposed the variance into volume, freight rates, route changes, and timing, then reconciled the analysis with operations invoices. The main issue was a temporary shift to premium transport, not uncontrolled recurring spend. I quantified the margin impact, recommended restoring standard routes where service allowed, and added a weekly tracker. That approach gave management a clear explanation and converted a historical variance into an actionable operating decision. Be sure to mention how you isolated the variance, distinguished timing from structural issues, validated data with stakeholders, quantified the business impact, and recommended corrective actions with clear ownership. Question 5. How would you evaluate a pricing decision for AB InBev's brands? I would assess pricing on a net revenue and profit basis, not simply the list price increase. I would model expected volume elasticity, competitor responses, pack and channel mix, promotional support, and variable costs. A price increase may improve revenue but destroy profit if consumers trade down or retailers reduce orders. I would compare scenarios, identify break-even volume loss, and recommend differentiated actions by brand, channel, and market. After implementation, I would track realized price and mix against the business case. Focus on net revenue, elasticity, pack architecture, channel economics, competitor behavior, trade investment, volume effects, mix, and the difference between reported price increases and genuine revenue growth. Question 6. What financial metrics would you use to assess commercial performance? I would start with volume, net revenue, revenue per hectoliter, gross margin, and EBITDA, then add market share and trade spend effectiveness to understand competitive health. For cash discipline, I would monitor inventory, receivables, payables, and operating cash conversion. The important point is connecting metrics. Revenue growth from heavy discounting may weaken margin, while EBITDA improvement caused by underinvesting in marketing may be unsustainable. I would therefore review financial and operational indicators together with clear driver bridges. Make sure to cover volume, net revenue, revenue per hectoliter, gross margin, EBITDA, market share, trade spend effectiveness, cash conversion, and the need to interpret metrics together. Question 7. How would you manage working capital in a beverage business? I would manage working capital through the operating cycle, recognizing that beverage demand can be seasonal and inventory must support promotions and peak periods. I would monitor days inventory, receivables aging, payables, forecast bias, and obsolete or slow-moving stock. Actions might include improving demand visibility, tightening collections, reviewing customer terms, and aligning production with sellout. I would partner with sales and supply chain because aggressive reductions can create stockouts, lost revenue, or emergency production costs. In your answer, discuss inventory seasonality, production planning, distributor receivables, payment terms, service levels, cash conversion cycle, cross-functional ownership, and avoiding savings that compromise customer availability. Question 8. How would foreign exchange movements affect AB InBev's results, and how would you analyze them? I would separate transaction exposure, translation exposure, and the broader economic effect on competitiveness. For example, imported materials may create direct cost exposure, while translating a foreign subsidiary affects reported group results without changing local economics. I would quantify the impact on revenue, COGS, EBITDA, and cash flow, then present constant currency performance alongside reported numbers. I would also review existing hedges, natural offsets, and sensitivities. The objective is to distinguish operational performance from currency noise while managing genuine cash risk. While answering, distinguish transaction, translation, and economic exposure, identify currencies and business drivers, separate reported from constant currency performance, and explain hedging and sensitivity analysis. Question 9. How would you assess a capital expenditure proposal for a brewery or distribution facility? I would first establish the strategic needs such as capacity, efficiency, quality, safety, or logistics improvement. Then I would model incremental revenue, cost savings, maintenance, taxes, working capital, residual value, and implementation timing. I would evaluate NPV, payback, and downside scenarios, particularly utilization and construction risk. A strong approval paper should show assumptions transparently and identify milestones. After approval, I would compare actual benefits and spending with the business case, ensuring capital allocation remains accountable. Be sure to mention strategic rationale, capacity utilization, incremental cash flows, NPV, payback, working capital, execution risks, scenario testing, and post-investment review against the original case. Question 10. Describe how you would strengthen financial controls without slowing the business. I would begin with a risk-based assessment rather than adding controls everywhere. Key areas might include revenue recognition, trade spend, procurement, inventory, journal entries, and vendor master data. I would confirm segregation of duties, approval limits, reconciliations, and documented evidence, then automate recurring checks where possible. Exception reporting is usually more efficient than reviewing every transaction. I would involve process owners so controls fit how work is performed, and I would test whether they operate consistently, not merely exist on paper. Focus on material risks, segregation of duties, approval thresholds, reconciliations, master data, evidence, automation, exception reporting, and designing controls that fit operational workflows. Question 11. How would you handle a disagreement with a sales leader over forecast assumptions? I would treat the disagreement as an assumption quality issue, not a personal conflict. I would ask the sales leader to explain the customer evidence behind the forecast, then compare it with historical conversion, pipeline data, promotions, capacity, and market trends. If uncertainty remained, I would present base, upside, and downside cases with explicit probabilities or triggers. We could agree on leading indicators and revisit timing. This preserves commercial ownership while ensuring management sees a balanced, evidence-based outlook. In your answer, show respect for commercial knowledge, use evidence and shared objectives, test assumptions through scenarios, avoid confrontation, document agreement, and escalate only when necessary. Question 12. What would you do if AB InBev missed its EBITDA target late in the quarter? I would first establish the size, timing, and causes of the gap using a driver-based bridge. I would separate structural issues from timing and identify realistic levers across pricing, mix, promotions, procurement, discretionary spending, and working capital. I would not recommend pulling forward revenue, delaying necessary costs, or using unsupported assumptions. Instead, I would present a credible recovery plan, quantify risks, update the forecast, and communicate early. Protecting data integrity and long-term performance is more important than a cosmetic quarter-end result. Make sure to cover rapid diagnosis, controllable versus uncontrollable drivers, revenue and cost levers, ethical judgment, cash implications, forecast updates, and transparent communication to leadership. Question 13. How would you use data and technology to improve finance effectiveness? I would start by standardizing definitions and improving data quality, because a sophisticated dashboard cannot fix inconsistent inputs. I would automate repetitive reporting, reconciliations, and variance alerts, then use dashboards to show volume, price, mix, margin, inventory, and cash drivers by market or channel. The value comes from faster decisions, not attractive visuals. I would validate outputs against the ledger, document ownership, train users, and measure whether automation reduces cycle time or improves forecast accuracy and management action. Talk about data quality, standardized definitions, dashboards, automation of reconciliations and reporting, driver-based analytics, user adoption, controls, and converting insights into measurable business action. Question 14. How would you lead and develop a finance team in AB InBev's performance culture? I would set clear priorities, define what good looks like, and connect individual work to business outcomes. I would coach team members through analysis and stakeholder interactions rather than simply correcting their outputs. Regular one-to-ones, development plans, and feedback would build technical and commercial capability. I would maintain high standards for accuracy and ownership while encouraging people to raise concerns early. Recognition matters too, especially when someone improves a process or influences a better decision beyond the finance function. Be sure to mention clear objectives, coaching, accountability, technical development, business partnering, psychological safety, recognition, succession planning, and alignment with ownership and high-performance expectations. Question 15. What would your first 90 days as an AB InBev Finance Manager look like? During the first 30 days, I would learn the business model, brands, channels, key metrics, reporting processes, and stakeholder expectations. By 60 days, I would validate the forecast and close mechanics, review major variances, and identify control or data quality gaps. By 90 days, I would deliver a prioritized improvement plan, including quick wins in reporting, working capital, or process efficiency. I would build credibility through accurate analysis, practical recommendations, and visible partnership with commercial and operational leaders. In your answer, structure the plan around listening, understanding strategy and performance drivers, validating reporting, building stakeholder relationships, identifying quick wins, and establishing a practical longer-term improvement agenda. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.